Hello everybody, this is Julio Pinero. I'm doing a presentation about time frame correlation or time frame agreement. Basically, I want to show you the importance of understanding the bigger picture and what is really happening overall. So you need to need to step back and look at the higher time frame, for example, the weekly chart or the monthly chart, and then see what's happening overall. Put your levels up. Need to identify tops and bottoms and see what those parameters are. Now, here is the thing. Every currency pair will have different parameters in terms of turning points. So, for example, if you look at the pound versus dollar, the parameters on this chart for the past 4, 5, 6 years is between 150 to 170. And obviously this you can only see it on a very high time frame. I'm on the weekly chart in this moment in time. So let me just make it a bit more clear. I'm gonna put one level at 150. So it's literally just somewhere here. I got 150.14, so you got it 150. So this is 5,000 level or the 1,500 level. It's a very psychological number and it's a rounded figure as well. So um, basically what happens is that pretty much every time it goes down to the 150, it tends to the upside. And what does it go to? Well, it goes up to the 1.7 there and then. So let me just adjust the figure a little bit. 1.7 is around there. Okay, so the parameters is between 150 to 170. Now, if you think about it, currency pairs, they're always ranging overall. So they're always locked in between two different parameters, and this is what you need to identify. Now, each currency are clearly going to have different tops and bottoms. So you just need to know and understand what are these tops and bottoms on the different currency pairs. The white line in the middle, that is the current price. So you can see the market has turned when it reached the bottom and seems to be that it's on its way up. Well, it has clearly bounced already off the bottom of the floor. There is the floor and there is the ceiling up here. So it's a support and the resistance, and it's just locked in between the two parameters. Now, this drop here, that was the recession. So ignore that because this was um, driven by news and fundamentals. So we're not trading that. We're just trading the technical pattern. So we're trading, in this case, there is a huge range, very nice, and it's just been going up and down, up and down, up and down, following the range, and that's what we are now in this moment in time. Now, what you have to do is you have to go into the daily chart just to have a. So now we're drilling back in again, just to have a better understanding. So you can clearly see that it bounced off the floor and it's on its way up already. Now I'm gonna go plus plus end on your keyboard. It will take you straight to the last price. So this is where we are now. Currently the market is giving high highs and high lows on these small cycles here. So this high is higher than that high. The next high is also higher than the previous high. The lows are getting higher too. And here it gave a double bottom formation. There's a nice double bottom. And it's been going up since then. So these are the parameters on the pound versus dollar. Now when you're trading it, obviously you know how far can you take it to, what the levels are, and then basically just carry on with your trading. So this is one of them. Let's say we go to, for example, the euro. This is the euro versus dollar. I've got minus, minus. Now the parameters here is usually from like 140 to like 120 for a very, very long time. Now if you carry on going further back, you'll see that it, like 8 years ago, 10 years ago, it went down to like 112, 110, but that was quite a while ago. Okay, that was okay. This is the weekly chart. Now this is a very important level, which I'm gonna draw. Here we go. Very significant level. We're gonna go back to this level now in a minute. So basically the parameters here are it's usually well, that was the recession. That was 2008. Here in the weekly chart, that was 2008 there. Back then, that was the Deutsche Mark, that was the German currency before the euro. Okay, and then since then, it's been going straight up, and it stopped at the 160 level, and it was absolutely spot on. So that was the 160 level. Then it came straight down to like 125, which is down here. 120. From 160 to 120, yeah, 122, and then 123, 122. Then from there went straight up to 150, and it reversed there at the 150 level. Then it came back down. Now this time went straight down to the 120 level, and then from there, yeah, 120 there, 119, 120. Then from there went straight up to 150 again, and then from there back down to the 120, and then from there back up to 140. So it's been always rounded figures, always psychological numbers. So I'm gonna do it again. 160, close to the 120. Then when it goes up, went up to 150, 120, 150, 120, 130, 140. Sorry. So it's been 60, 160, 150, 150, and 140. Always big psychological numbers. Okay, and then from 140 it dived down straight down to, and it's now like 114. Okay, it went down to 110, 111, something like that. So that's what the market has been doing. It's been always bouncing off big psychological numbers. Overall, the parameters lately has been 140 to 120. Yeah, 140 to 120. These are an extreme noise like 114. This is due to all the issues happening in the Eurozone, which again is fundamentally driven by on a technical, or from a technical perspective, it'll be always pretty standard. It will always be locked in between two safe parameters, unless something big happens. And if something major happens, in that case, it will come out of that comfort zone. So it will come out of that parameter, which was what I was talking about earlier. Um, so that's where we are now. 114. So again, that's the comfort zone. Is this range, this area here in the outside that, those are like extremes in the market. Okay, now at the same time we have the US market making historical highs. So we got the S&P 500 daily charts. I'm gonna do plus end on your keyboard, take you straight back to the last price, and this is where we are now. It gave a historical high today. It even reached the 2,100, which actually 20,000 points plus. It's always an extra zero on the S&P 500. On different ones, well, the Nasdaq had a big push to the upside as well. Yesterday the market was closed. Was it yesterday? Yeah, yesterday before yesterday the market was closed in the States, so it wasn't much action really. It was yesterday at this little bar here. Now that's why pretty much I ended up flat. Now today is bullish, pushing up a little bit. Seems to be that we're gonna have another leg to the upside, which is pretty good. I'm actually bullish on the US market still. We have the Dow Jones reaching the top. It's not quite making a historical high just yet, like the S&P. But it had a very bullish day today. On the other hand, we have the UK 100, which had a big push to the upside, but this is still on a ranging mode, as all it's done is just basically range from like 6,900 straight down to like 6,300. So I would say if any of them break through the upside, let's say the US market carries on to the upside, the FTSE will follow. Or if the FTSE break through, obviously will encourage all the other ones to have another push to the upside. German 30, surprisingly enough, has been performing very well and been pushing up quite aggressively. Now is kind of stagnating here a little bit. It is looking quite bullish still. This last part is a bit too big in relation to the other bars, although now here you can plot any moving average. Let's say we're gonna plot the 10 moving average. Make it gold. There we go, pretty spot on. So that's your 10 moving average. Market has been giving high highs and high lows. That's a bit of a forming a ring low. Don't know if it's a low test bar or not. You will have to measure it. It doesn't look like a low test bar to me. If so, the tail should have been minimum half than the rest of the bar. So it's not quite a low test. It is forming a ring low after giving high highs and high lows. I can show you some fibs as well. Fib retracement from the previous swing low to the previous swing high is giving a 50 fib retracement level, so it's halfway through. The 618 is not qualified because it didn't quite touch, and the 38.2 is not qualified either because it opened below the line. So on that basis, the 50 fib retracement level is the one that is clearly qualified, which is halfway through between this low and this high. So yeah, this is an extra point on your checklist. Now this daily bar will close in 57 minutes from now. The spread is 9 pips commission. I think it's a bit cheaper during the day, mainly because of the volatility and the liquidity in the market. This could be like a potential to buy and to carry on bringing the stocks up for a little more. Let's see what else we have. He's pushing up still. Looks very similar to the German DAX and also the Dutch 25. It looks very similar too. Had a big push, and then he's giving little cycles there, but he's slowly pushing up. You can see the angle of the 10 moving average. Oh, he's pushing up too. But here you will obviously you'll be buying right at the top, and there's bullish continuation bar. And I'd rather wait for some kind of entry signals like this one here. So that is a beautiful lotus bar in the direction of the trend. The pullback is not the most amazing pullback ever. Still a ring low here too. Bouncing off the 10 EMA. That could have been a nice buying signal. Obviously before that you need to look left and see, make sure that there are no concrete walls holding us back. And that goes to well, you have to go to the daily chart, then weekly and then monthly. So I'm gonna go to the weekly now. Now there are not levels holding us back. The next level is quite far away. That's what it is. That was the recession. You can see here clearly. And they had a big drop here during the tech boom in 1999. And the one that got the most effective was the Nasdaq 100, which are the blue chips. This one here, NAS 100. And you can see that it's got a lot of space to go up still, so you can keep an eye on it. And I'm trying to look for buying opportunities. Again, now, because these are all safe havens, at the same time you have gold and silver pushing down quite a lot, because the money is shifting from commodities such as gold and silver, and it's going onto the stock market as investors are seeing the stock market as a more reliable investment, an opportunity to maximize their returns long term. So if you go into like silver, for example, had a big drop. It had a drop of like 5% in just a day. Gold had a big push to the downside as well. So basically the money is shifting from gold and silver onto stocks. Even though they're also known as safe haven, but obviously it'll be shifting from one market to another. Now crude oil seems to be turning to the upside. I'm gonna go into the daily chart, and that's what it's been doing. Seems to be that it has actually tested nicely the level at the bottom. There is a huge trend line support going across the bottom, going back like 15 or 20 years, and it has reached the level 4 times now, and the level goes across the bottom. Now you can see that is has been respecting this level and is bouncing off it. Today is giving a low test bar. Now if you break through these highs here, it's gonna start making new highs and then pulling back down. You can start looking for buying opportunities there, and then you can increase your reward risk ratio. You can go for obviously you need to follow your checkers. You can go for like 2-to-1, 3-to-1s. Just need to make sure that this low is not broken. It's a bit of a double bottom formation. It was a low test followed by another low test here. If you put any of the indicators to the bottom, you'll see a very strong divergence too. In order to do that, you have to go into indicators, trend, then have to go into isolator, then stochastic A33. On the close, boom, you see the divergence there. He's pushing down, he's pushing up, very strong divergence, and then voila, off it goes up, puts a new high. It's been stagnating here for a while. That's the high that has to break through these highs, as I said earlier. Put a new high, then pull back down. You can start looking for buying opportunities after high highs and high lows. Now, this like he's been pushing down quite aggressively. You gotta be careful with this chart. Just make sure it puts a new high before looking for any kind of buying opportunity. So I would say puts a new high, pulls back, so it's high highs, high lows, and then from there. Okay, so this was a bit of a understanding in terms of time frame agreement and time frame correlation, and identifying the pattern, the bit of a pattern recognition, and also identifying the parameters and the tops and bottoms in the different instruments and forex currencies. So again, what you have to do is to analyze the market, trying to spot tops and bottoms, see where we are, see how far can we go to the upside, see how far can you go to the downside, and then you'll have a much better understanding of how the market is performing and doing, and then you'll see how far you can take that particular trade, and that's the way forward. A bit of understanding will always help in terms of the time frame correlation and time frame agreement, which was the topic for this presentation. All right, guys, I'm gonna leave it that for now, and I'll catch you all very soon. Speak soon, cheers. Bye now.